I'm Dan Fitzpatrick at StockMarketMentor.com. Look, every day we watch the same shows: Fast Money, Mad Money, Closing Bell, Opening Bell, Power Lunch, etc., etc. And they talk about all kinds of stocks. Okay, but the deal is, I don't just want to hear about stocks, I want to know how to make money on them. And so what I'm doing in this series of videos, looking at 3 stocks I saw on TV, see if we can't figure out a way how to make money on them. Today we're going to look at LinkedIn, ConocoPhillips, and Clorox. Okay, LinkedIn, after the bell today, reported, well, let's just say really dismal results, and you can see how the stock traded down after earnings. Looks to me like it's found some support right around in the mid 130s. In my chart of the day video, by the way, which you can get on stockmarketmentor.com for free, just go there and sign up for the email list, I talked about this and about the importance of discipline in after hours trading, so I hope you'll check that out. But here's the thing. As I'm looking at this stock right now, I'm seeing about $1.35, $135 handle as support for this stock. That's clear down here. My bet is tomorrow, with this kind of decline, about almost a 30% decline, we're likely to see some kind of snapback rally. So I want you to use, if you're an intraday trader, if you're a fast trader, then use that 135 level as a reference for stops. Seriously, like about $1.35. As long as the stock is trading above that level, I think you're good to go. By the way, if it gaps down further, then start trading it to the upside once it hits that 135 level. Okay, ConocoPhillips company cut their dividend. Not good, not a good move for the stock, or for the company, but what happens? Okay, we get a big decline, 8.6%, but the stock's still above this intraday low of 32.71 here. So could the worst really kind of be already baked into the company? Here's how you trade the stock. If the stock continues to go lower, you got to use this 33. I would even tighten it up a little bit, maybe even look at 34 as a stop loss on this if you're making a new purchase of the stock. But look at the weekly chart. Okay, this has been absolutely hammered. Now, the thing with these oil and gas stocks is they've gotten hammered and then hammered again and again and again and again. I mean, it's just absolutely brutal. So I don't want you to be too cute with this. But when the company slashes its dividend and the stock does not hit a recent low, that's probably a pretty good indication that it might be time to buy this stock. So you're not really buying the stock for the dividend. It's actually kind of a good thing that they cut the dividend, and that's what the market's telling you right now. And the reason is because they need the dough, okay? The oil industry kind of stinks right now, and so these companies need their money rather than paying them out in dividends. So not a good thing for the shareholders, but a good thing for the companies, and that's really where these stocks ultimately trade around, is the fortunes of the company. So check out ConocoPhillips as a potential buying opportunity. Now, Clorox, Kramer interviewed the CEO on Mad Money after the bell, and the stock's actually up a little bit. Let's take a look at this in after hours trading. You know, not a lot of shares traded. That's what happens when the tickers are 3 letters, but the stock is up a little bit. So here's the thing. Stock is range bound. This is not a trending stock. It's just range bound. You can see the 200-day moving average is kind of steadily moving higher, but there have been like 2 opportunities, actually a few more, to buy the stock on the 200-day moving average. This is not that. Instead, you got to look at this price level here, and that is your current support for the stock. This, frankly, is not a stock for most people. And the reason is because it's trading in a sideways kind of choppy range, 5-6% is all, and it's got, quote, work to do. It'll likely be trading sideways for quite a while. So if you don't have the patience to hold this stock for quite a while, then this is not a stock for you. But if you do, this is actually the right time to be buying it because it is in a trading range. It'll probably trade there for a while, but we like to buy low. This is low. This is where you buy. No matter how much patience you have, it'd kind of stink if you're buying the stock up here at the top of the range, then you're sitting holding it for a couple months while the stock drifts lower, having, given you a better entry had you chosen to take it. So you're not doing that. Now the stock's down at support. If you are the patient type that'll buy this stock for a 2.3% dividend and a mention on Mad Money, then this is your entry. Otherwise, you probably want to, take a pass on this and look for other stocks that are going to give you more immediate returns. Okay, that's it for this video. 3 stocks I saw on TV. Hope these work for you, and I hope you have a great weekend.